Hey, good afternoon, everybody. Ryan Derks here. I am going to do a July market review for all of our clients at Derks Financial. Before we get started, remember disclosures. This is not financial advice. If you want financial advice, you need to be a client. Call, come in, something like that. What we do here is just a little bit of commentary, a little bit of updates on what is happening. So before we get in, we have 1, 2, 3, 4, 5, 6 stocks that we're going to do a rapid fire earnings review of. It's a mixed bag. But first, let's talk about the massive market sell-off that happened and spooked a lot of people. Basically, it's out of our control, you guys. It's that while there are a lot of interested parties, a lot of ins and a lot of outs, the primary trigger of what happened to cause this is that in Japan for the last few decades, just through their economic decision making that the central banks have made, they have had to keep interest rates at zero. Well, over time, that's really hurt their economy, and they've had to decide, do we raise rates and hurt the rest of the world, or do we keep rates at zero and allow our own economy to become weaker and weaker? And the reason it would hurt the rest of the world is because a lot of big global billionaire type traders know that they could borrow Japanese debt at zero interest and then use that as collateral to go buy maybe a US bond or something else that does pay some interest. And it's very highly leveraged, and it works when it works. But when you're very highly leveraged and the Japan bank raises rates from zero just to 0.25, then you're going to have massive increased expenses and all that borrowing you did. So let me just read this real quick. Japan held its rates at or near zero for 15 years. As such, investors began borrowing trillions of yen and investing them in stronger currencies and assets. Essentially, it was a bet that the yen would continue to fall in comparative value. It worked well until last Wednesday. Japan's central bank finally hiked rates a bit, just to 0.25, which is still insanely low, but it spiked the value of the yen by 7.5% compared to the US dollar. It enforced investors to cover their short positions to the tune of billions, creating enormous losses. This was called the yen carry trade. That's about it. When that massive spike in short position cost happens, what do you got to do? You got to sell off your tech stocks that are doing well. You have to sell off your crypto that's doing well. You have to sell whatever it is you have so you can pay that debt back. Okay, let's go quickly. Oh, one more thing that is not earnings related. Warren Buffett discloses that he has sold about 50% of his Apple shares at Berkshire Hathaway. Is Buffett calling a top in tech? Honestly, you guys, it's tough to know. I've watched this conversation on Twitter a lot. A lot of people are saying, hey, rush for the exits. A lot of people are saying Apple became more than 50% of Berkshire Hathaway. He had to sell some. I don't think we've heard from Warren Buffett why he did. So time will tell. Honestly, it really hasn't affected Apple's price that much. It's a little bit mixed in with just what's been going on with the general overall market sell-off. Visa report earnings. Visa reported earnings. Their earnings were off a bit, but even so, it was just simply that the growth of expenditures, the number of card holders is still increasing year over year, quarter over quarter. What they're saying here is that allegedly the steep borrowing costs limited consumer spending. So essentially, interest rates of 25, 30, 35% on credit cards are not helping. So here's the thing though, the earnings per share, really nice, looks great, they did it. Revenue, 8.9 billion versus an estimated 8.96 billion. So don't let that freak you out when you hear that they missed their earnings. They still made $8.9 billion. They're doing fine over the last 3 months. However, didn't do great for their shares. They are kind of flat though over the last month, which is better than some of the other stocks we'll see. Microsoft had earnings. Again, Microsoft barely missed earnings and they dropped out of bed. However, again, if you go back to the actual data, their revenue beat. They beat what they were estimated in revenue. They're estimated to have 64.5 billion. They came in at 64.75 billion. Still, 64 billion of revenue. They're doing just fine with all that cash they have too. The big thing that caused them to drop 6.5% was their cloud revenue. You know how dramatic they can be in the news. Their cloud revenue was very weak. They still made $36.5 billion. They were 400 million short of the estimate. 36.8 versus 36.84 billion. They're doing fine, although there's a sell-off. Great buying opportunity, probably. ADP, we love ADP. Great company, very well run. They actually came out with their earnings a few weeks back, and it looked really good, really good. Their revenues were up 6% year over year, quarter over quarter. Their total revenues were up, and then their outlook for the rest of the year, again, they think it's going to continue growing. What's also pretty awesome is their adjusted earnings per share is growing by 12%, meaning that the company is actually the group, the executives are doing a great job of growing the company while not diluting shareholders. Their stock price is up 13%, 12.5% last month. Really awesome for us. And then finally, United Health. United Health had earnings. United Health beat their earnings, even though they had a cyber attack. Now, I don't know if you guys remember this, but United Health has been plagued by lawsuits and then cyber attack. But most of all that is in the rearview mirror, and they've gotten right back to continuing to grow, continuing to do an awesome job of being a very, very profitable company. Aside from that, that's really it. They grew really nicely, considering if you look here, up 15% last month. And, they didn't start off, they didn't have a really great year. January, they fell and they fell more and they fell more. For those of you who are watching closely, we bought a ton of United Health right in here. So we're doing really nice on that, and they keep pulling out. So you guys, that's about all I've got for you right now. We've got some earnings this month so far in August that have come in so far, and they're looking pretty good. I will be making a video for you real soon. But I just wanted to keep you guys up to snuff on what's going on with your stocks. All looks good. Don't forget these stocks that we own, tons of cash on hand, dividends that are growing regularly, and massive compounders. So honestly, guys, that's about it. Call me if you have questions, but I'll see you on the next video. Thanks.